at the Olympic Training Center in Chula Vista, and I consult with athletes on just being compliant with taxes, maybe helping them file back taxes if they're not compliant, and really just, kind of consulting with athletes who've made considerable amount of money but don't know what to do with it, or how to save in their taxes when they're coming into some income. Okay, and then I recently joined Lauren with doing some tax seminars and presentations. We were at the annual meeting and we did one together. It was really more of an in-depth one that we're going to do now, because we want this to be, like she said, more discussion oriented so that you guys can get your questions answered. So I'm going to go over just a few PowerPoint slides of some general, maybe tax filing requirements like deductions, what's taxable income, and then some tax tips to help you guys kind of organize your expense receipts, just some helpful information. And then we're going to leave bulk of the whole presentation open for your questions. Does that sound good? All right. So I get a lot of questions sometimes. What is taxable income? What sort of income is taxable for the IRS? So we're going to go over that. We're going to go over the types of expenses that you can deduct on your tax return as a professional track and field athlete. And then what taxes are you actually paying, whether it's ordinary income tax or self-employment tax. And we're going to go over that briefly. And then we're going to just discuss some resources that you can use to prepare for tax season now, as well as for next year and into the future. And then, like I said, at the end, we're going to do Q&A. If I'm going too fast, please feel free to shoot a note and stop me and interject with questions as you have them, okay? All right, taxable income. In the eyes of IRS, all worldwide income is taxable, okay? It's subject to taxation. There's nothing that is not taxable unless the IRS says it explicitly or states it in writing. So that means your prize monies that you earn in the US, as well as in Europe or the UK or in Greece, wherever you travel, that's all considered taxable income to the IRS. And that's whether if you earn that in cash or if it goes through your agent first and the agent distributes to you, that's going to be taxable and reportable on your income tax return. And okay, so that's a short slide, because there's really not much that the IRS will not tax on your income tax return. But for purposes of you guys as athletes, just know that pretty much your sponsorship money, even in services in kind, are considerable taxable to you. All right, on the deduction side. Now deductions, these are expenses that you can write off against your income to reduce your taxable income, thereby reducing your taxes, okay? And the only thing you really need to understand when it comes to expenses that you can write off is just know that the IRS has two requirements for business deductions. One is that the expense has to be ordinary in your line of work, okay? And it has to be necessary for your line of work. Both of those criteria have to be met. They have to be both, the expense has to be both ordinary and necessary for your line of work. Okay, and ordinary means common. So for instance, you're a track and field athlete or just a professional athlete, you can't deduct an expense for tooling because you're not manufacturing anything. So it has to be ordinary, like it's common. And then it has to be necessary. I mean, it must be an expense that you need to incur to produce income, okay? And then I'll list some expenses, types of expenses that's pertaining to you guys that are deductible. Travel, meals, entertainment, that's given. Know that meals and entertainment, those are only 50% deductible. So that goes for your entertainment, when you're traveling, if you go to the movies or if you buying DVDs, movies for your computer or downloading podcasts or even buying an iPod for your warm-up or what have you, 50% of that, those types of expenses are deductible. Then you have your gear and uniform, equipment, membership dues. Generally, anything that you incur, any expense that you incur to generate revenue or to do your line of work, to perform, to compete, those items are deductible on your tax return. And this list is not by any means exhaustive. This is just to give you some examples. And I can give you a more detailed list to email to you if you guys are interested. Any questions on that so far? Okay. Now, professional athletes, they're not only subject to ordinary income tax, but they're also subject to self-employment tax. Now, the self-employment tax, that's a tax that's levied on self-employed individuals who are not incorporated. So most athletes are not incorporated, meaning you receive a 1099 statement from from Nike or Adidas or your agent showing all the income that you've earned for the year, or you receive a 1099 from USSOC or USATF for prize monies that you've earned. Those are kinds of things that will subject you to self-employment tax. And the self-employment tax is really just a Social Security and Medicare tax that you would normally have withheld from your W-2 income, your regular paycheck. Those are the taxes that you normally pay through your normal paycheck. But because you're a self-employed person, you're now responsible for that tax for yourself. And as an employer, because you're your own business, can you guys still see my screen?
Mm-hmm.
Okay, good. Okay, you're subject to self-employment tax. And we can talk about in another session a way around that tax, which is to incorporate as an LLC or to be taxable as a S corp. That'll eliminate that self-employment tax. But professional athletes, you're gonna have your regular ordinary income tax, which is just tax on income and wages, and then a self-employment tax, which is an additional 12.6% of tax that you're subject to. And then we have the jock tax, and the jock tax is really a colloquial term used for professional business tax. This tax is usually more related to professional athletes who compete in various states, like professional football players, basketball players, but it does also pertain to track and field athletes. It's just that it's more targeted towards professional football and baseball and basketball players because their salaries are so public and their schedules, their game schedules are so public. So there's local law enforcement or local tax authorities that really go after those athletes and make sure they're paying the local state and local taxes in that city. But that is typically called the jock tax. Okay, I have a question. Oh, can we get a copy of these slides at the presentation? Absolutely. Oh, I'm sorry, I didn't see your response, Lauren. Okay, great. All right. Okay, so any questions on the tax part? I mean, the main thing you need to grasp here is that you're subject to 3 types of taxes. The most common are actually the ordinary income tax and self-employment tax, but do not be surprised if you go to Georgia and Georgia has a task force to really go after athletes who are competing in Georgia to levy state and local taxes in that area. But the most common for track and field athletes is the ordinary and self-employment tax.
I don't know. Can you hear me?
Yeah, I can hear you. Is it Mason? Yeah.
Yeah, it is.
Okay.
So obviously, I live in the state of Michigan. I obviously pay Michigan state taxes.
Yep.
Do you recommend with the jock tax, even let's say you go to a race and earn, $1,000 in prize money? Do you recommend filing taxes in the state you earn that as well, or?
You know what? If you receive a 1099, well, technically the answer, well, for that tax, not every state levies the jock tax. Okay, mm-hmm. It's not in every state, and it's really in states that don't generate a lot of income tax that usually levies these taxes. But to answer your question, if you receive a 1099 and there's no amount in the state tax line of the 1099, if we around box 10 or 12 of your 1099, then I wouldn't be concerned about it. Because like I said, the jock tax, the task force really go after the high-end professional athletes like basketball players, NFL players, because they make millions of dollars and their schedules are so public, And so if they go, let's say the Giants, New York Giants go to Dallas and play the Cowboys and they're there for 3 days, then they have a rate or a percentage for the days that they're there, how they calculate the jock tax. But for track and field athletes, honestly, I've never seen it levied on a track and field athlete, so I wouldn't be too concerned about that. But that's just something to keep in the back of your mind if you see something from a state for jock taxes.
Sure.
Okay. Yeah, no worries. All right, let me get back to the PowerPoint. All right, now prepare for tax season. Okay, so, it's funny because athletes, they get very, just very anxious when it comes to their taxes and making sure they're compliant with taxes. And I'm here to tell you, there's nothing to be afraid of. You know, you can, if you prepare ahead of time, and even now, if you're kind of like, you know, in limbo of what to do to prepare for the 2017 tax filing season, to prepare your 2016 tax return, the main thing you want to do in any going forward this tax season and going forward is to just maintain copies of your actual receipts that you for expenditures for, you know, meals and entertainment, food, clothing, gear, training, travel, all that stuff. Okay, and I know with athletes traveling, competing all the time, you know, who has time to keep paper receipts for their records, you know, because sometimes, you know, the ink fades away on the receipts. So it's really hard to maintain, and it can be inconvenient. So what I suggest to athletes, there are tons of apps. You guys are young now. You guys are hip to apps on your phone. There are tons of apps out there where you can download expense apps, and where you can take a picture of the receipt, and the picture automatically uploads into an app where it categorizes your receipts for you and tallies them up at the end of the year. And then you have a list of your expenses you can give to your accountant or your CPA for your tax return. The one I recommend in bullet point 2 is the QuickBooks Self-Employed app to help manage your receipts, because it's super easy. The minute you go into the store, like for instance, when I go into Staples and I buy an office supply, usually I have them email the receipt so that I'm not keeping paper receipts, but I could just take a picture of that receipt and it uploads in my phone, it uploads to the QuickBooks app. And you can log in on QuickBooks on your desktop and see for the week, for the month, for the year, all your expenditures, and it's categorized for you. Also with the QuickBooks app, for those of you who travel quite a bit or use your car to travel to different track meets, it tracks your mileage. It uses the GPS system on your phone or your maps or whatever you use on your phone to get directions. It automatically tracks your mileage. So it's a quick, easy way to keep a mileage log without you having to keep a manual log book. So there are several apps out there that are really good for tracking your expenses, but that is one way to prepare for tax season. Because the main thing when you want to give to your accountant to prepare your tax return, they're going to need all your income earned for the year, all your expenses incurred for the year, and they need those expenses categorized by travel, meals and entertainment, you know, chiropractic care, massage therapists. You have to itemize those expenses, and QuickBooks, that app will do all that for you. So and the app, I have the link there for you for the app. The app is $10 a month. They have a special right now going on for $5 for the first 6 months, $5 a month. It's really inexpensive, and it just really takes away the headache for you. So that's one tip. I want to encourage you to maintain a separate checking account or a credit card or a debit card that you use only for your training and competition expenses, because this legitimizes you as a self-employed individual, a professional athlete, if you keep your expenses for your sport separate from your personal expenses. Because in the eyes of the IRS, they can say, oh, you're just doing this for a hobby. This is not really a business. And you can say, no, this is a business. It's legitimate. I have a separate checking account or credit card for these expenses, and I'm in it to make a profit. Okay. The third point, per diem rates. Of course, when you travel domestically or internationally, you know, there are receipts in different currencies, and that can be cumbersome to maintain as well, especially when rates change daily. Exchange rates are, you know, changing all the time. I recommend going to these websites, the per diem website for the continental U.S., gsa.gov, or if you travel internationally, go to the SEC website there. It lists, you type in or you click on the country or the city or the state that you're in, and it gives you the government per diem rate by city and state for meals, for lodging, for meals and entertainment, and for lodging. And the IRS, no matter if your expenses, your actual expenses in those areas, if there were less for the time that you were there, the IRS will accept these rates as deductible meals and entertainment and lodging rates. And most of the time they're a lot higher, because we have government officials that travel and they use this website, and the IRS has accepted the rates on this website instead of actual expenses. Now, if you use these per diem rates, you know, athletes ask, well, do that means I still have to keep my actual expense receipts when I travel over there for meals and when I go out to eat or when I take a cab or whatever? And the answer is yes, because you still have to prove that you were in those cities, and your actual expense receipts will prove that you're actually in those cities or in those countries during that time. but you can absolutely take the per diem rate that's listed on the website. And I'm telling you, a lot of times you get much more of a deduction than you would if you kept your actual receipt. So I strongly encourage you to visit those sites and play around and, you know, look at the rates for different states. I mean, in different countries, they have just everything in there, and it's very useful. Okay. The last bullet point about setting up a SEP IRA. If in 2016 if you earn some money, significant money, and you're worried about having a hefty tax bill for self-employment tax, you can set up a SEP IRA account through April 17th and make a contribution to your SEP IRA and get a deduction for that on your 2016 tax return. And you just have to set up the IRA account by April 17th. And I'm sure Lauren can help you and talk more about that with you, as she's the financial planning expert. But that's just one tip that a lot of athletes don't know about when it comes to more deductions or setting up a self-employment retirement account. Okay, I see there's some questions coming through. Dave Talcott said, the IRS told me I had to use actual expenses and couldn't use the per diem rate. Was this correct? And the answer is that was not correct. And I can, if you like, they audited us for the 2014 and 2015 return. I'm still waiting for the determination. You can absolutely use the per diem rate. I can actually show you the on the IRS website in the tax code where it states explicitly about using the rates from these sites. So I'll be happy to share that with you. I'm going to jot that down here. Dave Talcott. And it's actually on the IRS website. I just actually checked on the website on that about 6-7 months ago for another client, but that is in the IRS website. And you know what? You have to. I want to just inform you that, you know, the IRS agents, they are people just like we're people, and some of them do not know their own tax code. To give you an example, there's a tax practitioner hotline, a party line for CPAs and enrolled agents to call. And several years ago, the CSRs, the reps would explain some of the tax law, or just point where in the tax code a certain code is to apply to your situation. They really would just read it verbatim. They wouldn't expound on it in their own words or in their own terms and things like that. Now they've since done away with that part of the tax practitioner service line where they explain the code to you or point you to the right code. But I have to tell you, about 2-3 years ago, I called the IRS because I had trouble. Actually, it was longer than that, because I was helping a client recover some money from a Ponzi scheme. And there was a safe harbor law that would allow a taxpayer to recover some of his money from a Ponzi scheme. But there was a specific item or sentence or some jargon that I didn't understand about how to apply it or how to complete the correct form on it. It was just there was some ambiguity there. So I called the IRS tax practitioner line, the expert line for CPAs to call, and I explained to them what I was having trouble with. And do you know what the agent told me? Maybe you should contact your CPA. I said, I am a CPA. Well, maybe you should contact your colleagues. I said, well, my colleagues, we contact you at the IRS for clarification on these laws. So there are people that are probably making $15 an hour to sit there to point you to a tax law. So I just encourage you that the IRS can be wrong. And I've found them wrong a few times in my own practice with clients. So I'll be happy to converse with you more on that, Dave, about the per diem rate and maybe how we can get a reconsideration for that determination. If they rule that you can't use those rates, maybe we can converse about how to get a reconsideration for that. But that is absolutely incorrect. So I'm just letting you know that the IRS, even the agents, can be wrong and they don't know their own tax law. All right, anyone else? All right, so for preparing taxes, now the only other thing I want to discuss before we go into Q&A is, you know, identity theft and refund scams are just on a crazy uprise with the IRS, and they're really baffling with this problem. It's a huge problem. They've had hundreds of millions of dollars stolen and ill-gotten refunds from people who are just stealing taxpayers' identity and other things. Not only they're stealing identities, but fabricating W-2s and getting refunds on them. So I just want to just leave you some tips to safeguard yourself from tax scams, okay? First of all, the IRS only contacts taxpayers via the mail through the U.S. postal system. You're never going to get a random call from an IRS agent saying you owe a tax balance. And the minute that you do, you hang up and you call the IRS 1-800-829-1040 line, which you can get from the irs.gov website. But the IRS would never contact a taxpayer by phone or even an automated recording. I get those calls all the time, and they're rampant during tax season. And if you ever have any doubt, I wouldn't even entertain the call or call the number back. If you have any doubt, contact your accountant or the taxpayer or the IRS IRS phone number that's on the website. But never take a random call from someone personified as an IRS agent, because they never contact you that way. The other thing would be to obtain an employee identification number. This is just a tax ID number. That's something other than your social security number that you can give to your agent or to your sponsor to pay you under. And you don't have to incorporate to get this tax ID number. You can get it in 15 minutes on the irs.gov website. I can give you more information about that. And that's that way that your social security number is just not floating around out there. You're much better at obtaining AIN number for all your business transactions, okay? Never send money to anyone claiming to be an IRS agent. The IRS does not accept payment by PayPal or green cards or prepaid cards. I know that seems silly to say, but there are people who've become victims of tax scams by doing just that. Western Union wiring money to someone saying they're from the IRS. The best way to pay an the IRS bill, tax bill, is through the mails directly to the IRS address that's on the irs.gov or online through the irs.gov website, but never through a third party personifying themselves as an IRS agent, okay? And then just in general tax return preparation, if you have someone that approaches you about preparing your tax return, never allow anyone to prepare your tax return if they're telling you, hey, if I can get you $10,000 back in refund of taxes, how about you give me 30% of that, of any amount that I give you, or I can get back for you. Okay, so that's what they call a fee-based return based on the refund amount. And the reason that's illegal is unethical. The IRS does not allow it because then that person has an incentive to fabricate expenses on your tax return or even fabricate a Schedule C business. I had to represent a client in the audit because it was a guy at his job that didn't work at his job, actually. It was like all these people in his department were having this one guy prepare their tax returns, and he would have all the people, all his employees and coworkers, mail their W-2s to a P.O. box number to a P.O. box for one thing. And he never met with them in person, and he will fabricate deductions, charitable deduction on a Schedule A, fabricate Schedule C businesses, and get these people tens of thousands of money back in a tax refund, 10,000, 15,000. My client got back like 25,000 because he claimed like $30,000 for charitable contributions when he only made, $60,000 for the year and had a Schedule C loss of 20,000. And that is just a big red flag to the IRS. First of all, if you have charitable contributions that's half your salary, you're going to get audited because the IRS will think, not that you can't contribute that amount or, donate that amount, but they're going to think, well, how are you living? If you're contributing half of your salary of $6,000 salary, you live in California, one of the most expensive states to live in, you're going to automatically get audited. And he did get audited, and he couldn't, of course, substantiate those deductions because they were fabricated. And so he ended up having to pay not only the money he got in refund, but also he had to pay the tax that he would have paid had he filed the correct tax return, and then the penalties and interest on top of that. But had he just not, just had another accountant or CPA to tell him, hey, stay away from this guy. If he's charging you a fee-based return based on your refund amount, how much he can get for you, that's just a red flag. And then lastly, if you go to an accountant or someone who says, hey, I can prepare your tax return, but hey, I don't want to sign your tax return, but I want you to pay me for preparing your return. That is illegal in the eyes of the IRS. That's unethical. You need to run from that person, because if you're paying someone to prepare your tax return and they refuse to sign your tax return, that's a red flag. Either they've been barred from the IRS to act as an agent to prepare tax returns to to taxpayers, or they're just not legitimate and they're fabricating expenses to get you a big refund so they can charge you a lot. So you want to make sure the person you have helping you out with your taxes actually sign the return if you pay them. If you didn't pay them to do your tax, then there's no requirement for a tax preparer to sign the tax return. But if you did, you want to make sure you get a signature and their contact information on that tax return. All right, and that's all I have. Actually, I know it was just a quick overview, but we really wanted to leave the discussion up for anybody, for you guys to have, if you have any questions or comments, or you want to dispel some myths or some rumors or things that you heard about taxes and athletes, and this is time to relay those to me, and I'll answer them to the best of my ability. If there's something I don't know or answer I need to research, I'll be honest about that, and I'll research that answer for you and get back to you.
Okay, so we have 21 people online now. Whoop, whoop. Everyone is currently muted. You do have the ability to unmute yourself. I just ask you to be mindful if you're not speaking to remute yourself. But right now it's open season. Ask all the questions you want. I asked Tanisha to keep it, like you said, kind of broad, because we have all different levels of athletes here, brand new, first time fouling, all the way up to, been in the game for a while and trying to do it better. One thing I will say is that the reason I started this was, since I've started my firm, I've had a lot of people, think that a financial planner also does taxes. And, occasionally they do, but I'm not an accountant. And so many athletes have come to me with tax problems. And I realize that it's a real issue in our sport, from not filing, not knowing when to file, getting misinformation from someone else saying, oh, you don't need to file because you don't make enough money. The fraud, I have 2 athletes that came to me that were a victim of fraud that she's talking about. All these issues are real. So don't be bashful, don't be shy. If you have a question, you can either post it in the chat or unmute yourself and go for it.
Okay, I have a question, and I won't. Can everyone see everyone's questions when they're chatting? Or
yeah, the chats are for everyone. Oh, also take your share screen off so that everyone can see each other again.
Okay.
And if you have a light in your back, you have a light on now. Okay. Perfect.
Yeah, I know. I was like, man, I look like vampire over here. It was so dark. All right. First question is, how much does a CPA generally cost? Are there certain ones that know athletes better? CPA, it depends on the type of service you want. Tax returns, generally like an individual tax return, just a basic W-2 with no dependents, usually run from like $150 to $200 for federal and state, if you're in a state that requires income tax filing. But it's really dependent upon, that varies by individual, because one individual may have 2 dependents, and if you have no dependents, you may have a Schedule C. Are there certain ones that know athletes better as CPAs? You know what, a CPA, any CPA, the CPA exam is such a rigorous exam, and anyone who's passed the CPA exam is probably worth their salt to prepare an athlete's tax return. I would just say that if you have a CPA that knows or understands the background of a professional track athlete, especially track and field athletes, because the challenges I run to with when athletes come to me or about their previous CPA or the previous taxes preparers, they don't understand that our sport, our participation in the sport is considered a business, not just a hobby. I had one athlete that came to me and say, hey, my CPA won't allow me to deduct any of my training competition expenses because he says I didn't make any money in the sport and this is just a hobby. Can you write him a letter explaining our sport and that, that I can't take these deductions? And I did that, and I explained to him that, athletics is just like a startup company. In the first 5 years, we might not make any money, or we make very little money. It takes a few years for us to develop and then get into track meets that are paying money. So we may be operating loss. If you look at a startup company, some startup companies operate a loss for 5 years before they start earning a profit. The IRS is not going to say, oh, you're not a business because you're not making any money. Well, the same applies to you. If you're operating with a profit motive, like to earn money in your sport, then you're considered a business. I would just say to legitimize your business, keep your expenses, your personal business expenses separately so you can legitimize your business in the eyes of the IRS. But I would say it would be better if you went to a CPA who's familiar with the sport and familiar with athletes in general and expenses and the ins and outs of the sport. Okay. Would the athlete prepare a Schedule C? What occupation code would an athlete use on a Schedule C? So the answer to that is yes. You will report your income and your expenses on a Schedule C of your 1040. And the occupation code or the business activity code, I'm assuming you're talking about, you will use is 711210. 711210. I think that's like spectator sports, agents and stuff like that. So that's the code I use when I prepare athlete returns, 711210. Jay says, I came in late and missed some information. Is there a way to rewatch this again? You don't have this recorded, do you, Lauren? Oh, you do? Oh, there's a way. Lauren says yes, so you'll be good. And plus, Lauren's going to send out the PowerPoint presentation to everyone at the conclusion of this webinar. All right, for athletes who don't earn a lot, less than 20, and they incur losses every year, the IRS said that we couldn't continue to have a loss. We need to show endeavor to make a profit. Okay, this tax is for an audit. Despite my secular job being substantial and loss, just like I was saying previously, if you operate with a profit motive, the IRS cannot deny you a loss on your Schedule C. So all you have to do is have the difference between a hobby and a business is just the profit, the intent to earn a profit. If you're intending to make a profit, then you're considered a business. I mean, how do you show the IRS? I'm sorry. Hang on one second. Let me get back to your question here. The IRS said we couldn't continue to have a loss. That is not true. We need to endeavor to make a profit, and that's what you're doing. Now, if you're not going to practice, not going to track meets to compete where you can earn money, I would say that would be a different story. But the first few years, most athletes don't earn a lot of money. And so if you incur losses, those are legitimate losses. If you can substantiate your expenses, then that's all you need to take the deduction on your tax return. And Schedule Cs are most likely to get audited. But if you can substantiate your expenses by your receipts, keep copies of your receipts uploaded to the app, as long as you can substantiate your receipts and expenses, you're golden. The IRS cannot deny you a loss because they think you should have been earning a profit by now. Who are they? They're not professionals. I mean, they're not professionals in analyzing businesses and when business should turn around and turn over a profit. Can we carry over losses from a previous year? You can. If you have enough, if you had a huge loss from one year and it reduced your taxable income to zero, then you can carry that loss forward, I believe, up to 20 years, I believe. I have to double check that. But you can carry the loss forward until you extinguish that loss. And it actually is beneficial when you can carry forward the loss because you can offset future income. If you think you're going to earn material income in another year, you can wait to carry that loss forward and offset potential income. Okay, the difficult part is we are race walkers, and there are very few races with prize money, and we go to others to get better, but no chance of prize money. That's okay because there's more than one way you can earn money in your sport. It's not just prize money. You can earn endorsements. You can earn, TV ad, especially during Olympic season, Olympic year. There's all sorts of ways you can earn money. Public speaking, you can put that in your arsenal. So don't worry if you go to a meet and there's no prize money given. You don't have to compete. The criteria is not to have to go to a race or to a track meet where there has to be a prize purse for you to be considered a business. That is okay. You can still write off those expenses. The main thing is being able to substantiate those expenses. Okay, what are the tax benefits of an LLC versus incorporating versus sole proprietor? That's a good question, and I get that a lot, okay? Okay, so the benefits, I will tell you the benefits of incorporating as an LLC or as an S Corp over sole proprietorship is to avoid the self-employment tax, okay? So let's say I work for Nike as just a regular W-2 employee. I'm just a regular 40-hour-a-week employee. I get a paycheck every 2 weeks, and at the end of the year, I get a W-2. Now, over the course of the year, in my paycheck, I have withholdings of, your federal income tax, your Social Security tax, your Medicare tax, and Nike, the employer, will match the Social Security and Medicare tax to send into the IRS, okay? So there's the employee deduction for the federal income tax, the Social Security and Medicare, and then there's the employer match of the Social Security and the Medicare tax that they have to send into the IRS, okay? That's as a W-2 employee. Now, when you become a self-employed person, a sole proprietor, guess what? You become the employee and the employer. That means you're paying the employee side of the Social Security and Medicare tax and the employer side of it. So you're paying an extra 12.4% in Medicare Social Security taxes as a sole proprietor. So what incorporating does is eliminate that extra 12.4%. As a sole proprietor, you're paying the extra 12.4% on top of your ordinary income tax. When you become an incorporated entity, you avoid that extra 12.4% self-employment tax, and now you're only left with the ordinary income tax. That is the main reason athletes incorporate. The benefits of an LLC, of course, there's a limited liability, but for you, your benefit will be to avoid that self-employment tax. Now, the LLC, because you're usually you're your own company, your own athlete, you're single member, you're just incorporating for the purpose of avoiding that self-employment tax. LLCs, most LLCs are set up to limit their liability, but you won't have liability because you're just your own corporation. You're just doing it for, you're not doing it to avoid lawsuits because you're just your own person. You're just competing in races. Now, I'll have to say this though, in I think it was January 2016 or maybe 2015, LLCs, the IRS started enforcing earnings from an LLC are now taxed as self-employment rates, okay? So the main reasons athletes incorporate as an LLC is to avoid the self-employment tax. But now the IRS is saying, nope, we're not doing that anymore. Now earnings from an LLC would now be taxed as self-employment rates. So you wonder, okay, what do I do now? If I want to set up an LLC in my state, how do I avoid the self-employment tax? Well, you can set up an LLC, but then you can file a form with the IRS after you get your LLC set up to be taxed as a S Corp. That way, you get around the self-employment tax. So there's just an extra step after you get incorporated to file a form with the IRS to be taxed as a C Corp, which I don't recommend because you'd be subject to double taxation, but as an S Corp, so that you're only, the earnings, your net income from the S Corp flows on to your personal tax return, and you're only subject to ordinary income tax. Okay, so when I incorporate athletes, if they want to be set up as an LLC in their state, that's fine, but I make sure I go the extra step with the IRS and get them a tax ID number, EIN number, and to file Form 2335, I think it is, to be taxed as a corporation to avoid that.
Can I follow up with that real quick?
Sure.
So if I wanted to, I could file or be set up as an LLC and file as an S Corp and include my 2016 earnings on that, or would it be only forwards from incorporation? That's
right. Yeah. So the date of incorporation. So it's too late to do that for 2016 tax planning. So you can set up an LLC now and be taxed. Oh, are you set up as an LLC right now?
No, not currently.
Okay. So for 2017 going forward, you can do that. So you can set up an LLC and then file the paperwork to be taxed as an S Corp. You can do that.
So you definitely recommend being set up as an LLC. Like
if you're making each athlete is different. It depends on what you're earning and what kind of expenses you have. If you're earning a lot of money and don't have a lot of deductions, like a lot of athletes who are sponsored by Nike and Nike pays for their coaching and, whatever expenses, their travel, they get a stipend, and then you don't have a lot of expenses, then you'll probably want to set up as a LLC so that you can avoid that self-employment tax. But if let's say if you're making $25,000 a year and you have a deduction of expenses of $10,000, you only get taxed on $15,000 of income, but that gets further reduced by your standard deduction and your personal exemption. So your taxable income could be $8,000. At that point, it wouldn't be worth setting up an LLC because it'll cost more to set up the LLC, have an accountant file the taxes for the LLC. So you're better off, just being a sole proprietor at that point. But if you're getting up into, high 5 figures or 6K, each athlete is different. I always say just run the numbers. Let's see what your estimated tax is going to be at the end of the year, what it's going to look like as a self-employed person, what it will look like as a if you're set up as a corp, and if it's significantly, it's going to save you a few $1,000s, I would say go for it. Set up yourself as an LLC and be taxed as a corp. So you really just need to run the numbers. There's no like magic number to set up for an athlete to set up an LLC, because I've seen an athlete with $100,000 of income, but they had like, you know, $40,000 of expenses, and then they had 2 dependents and all these other mortgage interest to deduct, property taxes to deduct. So by the time it came to taxable income, it was very low and the tax was low. So
yeah, and a good accountant shouldn't mind running a tax projection for you to say,
absolutely.
hey, this is, you know, like you said, if you do it as a sole proprietor, this is what it looks like, because it's pretty much accounting software that they're using to run these numbers. So it's not cost or time intensive for them to, you know, you give them the basics of what your situation is, and they say, okay, this is what it looks like, you know, as a sole proprietor, this is what it looks like as an S corp or an LLC that makes an S election. So if you find someone that's not really willing to do that, then, you know, you might want to look for someone else, because that should be something that's a no-brainer, easy thing to kind of help you decide whether or not it's going to be worthwhile. One other thing I wanted to say was clothes. So one thing that sneaks up on people, and I know it snuck up on me during my career, was all the gear that you get. So sometimes athletes don't have a contract, or even if you do have a contract, you know, you're getting all this stuff and you're like, send me more stuff and this isn't enough. And, you know, we get excited about the clothing. We don't realize that they 1099 you, that those clothes are income, even though it's actual cash dollars and you think you're getting the clothes for free, you will get a tax bill for those clothes at the end of the year. So just be mindful of that.
Mm-hmm. All right, so Liz said, came in late. Can we include rent, utilities, and living expenses if we consider our residence our office? No. There is the home office deduction, but because you generate your income on the track, you're not subject to the home office deduction. I mean, you don't qualify for the home office deduction. Those would be mostly like maybe coaches or agents who work from home or have a specific area in the home that they use as a home office, and then they can deduct a portion of the rent, utilities, and living expenses depending on the square footage of the office compared to the house. But as an athlete, a runner, or a race walker, you're earning your income on the track. Unless you're doing maybe some public speaking and you have a specific area in your home that you, as a dedicated office, and you're, you know, doing research online and trying to land clients so you can go to corporations, do public speaking and things like that. But for just competing, the answer to that would be no. And then as far as deducting mileage that you drive from home to the track, the answer to that is no, because your track would be considered your regular job, like a regular W-2 job. So you wouldn't be, I couldn't deduct my commute to my regular job as a deduction. So the answer to that would be no. Great question though, because that's a misunderstood deduction actually. Yeah, so that track would be considered your office and therefore a regular commute. That is correct. Okay, but that income clothing is deductible, right? Okay, yeah. So if Nike, Adidas, or Puma, or whoever, or Brooks, if they're sending you gear and they're including that cost of that gear as part of your income, then what we need to do at the end of the tax year is get the value of that gear so you can deduct it as gear and equipment on your tax return. Has USATF sent the paperwork? Okay, so you want to know if you received your 10, or if they mailed the 1099s yet, so that you can take it to your accountant. There's been a new filing requirement by the IRS for 2017 tax season that all 1099s have to be mailed to the IRS and to the recipient by January 31st. So today is the deadline for all companies to get their 1099s out to you today. So if you haven't received it yet, you should be getting another week or so. So to clarify the mileage, can you deduct mileage from driving to meets that are not practiced? Absolutely. You can deduct mileage that you're driving to track meets. You can deduct mileage that you're going to see your therapist, or massage therapist, and chiropractic care. Though the mileage for going to see your chiropractic care or physical therapist, that is deductible at a different rate. There's the medical mileage rate, and then there's the regular business mileage rate. And is this mileage at a 50% deduction? No, it's 100% deduction. Actually, I take that back. It's pro rata. So you only deduct the business use portion of your vehicle. So if you're using your vehicle 50% of the time for track and 50% of the time for personal, that is the deduction that's the rate that you use. But the mileage rate is usually around 56.5 cents a mile. So you just tally up your miles for you going to track meets and then multiply that like 56.5 cents per mile. I don't know what the 2017 rate is. I think I'm not sure. I have to get back to you on that. But the medical mileage is usually significantly lower than the business mileage. The medical mileage is like 15, 20 cents, something like that, per mile. Any more questions? Fire away.
Can you talk a little bit about VITA and whether or not you would recommend athletes who don't make the $54,000 a year to go and use that free filing service that's available?
Oh yeah, VITA. I actually volunteer with the VITA service. This would be my 3rd year, I think. So of course there's certain restrictions for being able to use the VITA services. And one of those, if your income is under a certain level, and the other thing, which probably would disqualify a lot of athletes, especially newcomers, up and coming elite athletes, is that they will not prepare your tax return if you show a loss on your Schedule C. They can only prepare tax returns with a Schedule C that has income, because these are volunteers. They're legit. They're certified. They go through the certification through the IRS, their training manuals and things like that. But they're very restrictive on what types of tax returns they can prepare. So if you go to a VITA location and get your tax returns prepared there, you're in good hands, because they usually have CPAs and EAs overseeing the tax preparers and volunteers who prepare your return. But if you have a loss on your Schedule C, they would turn you away. Another mileage question, okay? So mileage that we can deduct other than the medical and meets that you cover, would it be if we go from track to gym? Oh yeah, if you go from the track to the gym, yes, but not from home to the gym. Yeah. So track to the gym, that would be deductible, because it's like going to a second training spot.
The other thing I can attest to is when she was talking about using QuickBooks. That's something I wish I had done during my career. I kind of fudged things a little bit. Luckily, didn't get audited or anything like that. But now that I'm running my own business, and I've learned that it's not as hard as I thought it would be to use those different softwares. I would definitely highly recommend that. And like you said, you can take a picture of your receipt right when you eat the dinner and add it to the online portal, whatever that QuickBooks has. So I would definitely recommend that. And then the other thing I was going to say about that is the worst thing you can do is try to do everything right and collect every single receipt. And then show up at your accountant's office with a big shoebox of receipts. Your accountant's going to charge you hourly, and if you really expect him to sift through all of that stuff, you're talking about, you say, how much does it cost? It's going to cost a lot. So the more you can be efficient, like you said, the more you can just kind of take a deep breath and say, like she said, the IRS is a set of people. Everybody's case is individual. They come back and they tell everybody a different thing. Don't try to cheat the IRS, but don't also stress yourself out in such a way that you're going to be like, oh my goodness, oh my goodness, how far did I go? You can probably say, I know it's this far to this far to the gym one day, and I go to the gym 3 days a week, and make a calculation without, I'm not encouraging you not to track your miles, but if you don't track your miles, you can do a kind of a basic estimate like that. So.
Yeah. I was going to say, sorry about it's QuickBooks. That's the name of the program to track your receipts and mileage. It's the self-employed QuickBooks, self-employed. And the link to the QuickBooks website is in the PowerPoint presentation that Lauren is going to email to you guys too. Can you provide a link to VITA? Yep, I absolutely can. I'll send that out. Actually, you can, if you Google IRS VITA, there are links there to find the VITA location nearest to you. If there's different locations, usually it's at a library or a church or something like that. They have them set up at. Someone's asking about investments. Besides opening a SEP IRA, what other tax-efficient investments should athletes use? Investments. So this is what I want to relay, or to just kind of clarify. You know, we always, or I should say we always, most of us, you know, paying taxes is a pain, okay? I mean, we want to get by with paying as little taxes as possible, and we want to make sure we have vehicles in place that's going to reduce our taxable income as much as possible. But we have to think about not only, you know, saving taxes right now, but we really have to think about what our tax bracket is going to be 10 years from now, 15 years from now. I mean, Lord knows who will be in office 15 years from now, and what the tax rates are going to be. So while we are looking and focused on saving tax money now, we may want to pay tax now while we know the rates, if you're not making that much income, and defer your income later. You know what I mean? So we want to look at like just the whole scope of your financial outlook, you know, and a lot of you guys are super young. You have years to save. You can put in build up your SEP IRA, or even do a Roth IRA where you using after-tax dollars now to store away money now, so so you don't have to pay taxes when you draw it out. You know, the Roth IRA is a really good investment. There's some other really good investments out there that's beyond the scope of this presentation, but I can definitely plug you with someone. Lauren, you probably know some investments as a financial planner, people who can plug you with some other investments that athletes should use. To save taxes now, even in future, a corporation, that you have to look at that as an investment, because you are going to be saving taxes, because you're going to be writing off a plethora of expenses, and you can set up a SEP IRA in your corporation, and you can have it set up where you are contributing to your SEP as an employee, because you're the athlete and you're competing, and you're also the employer. So guess what? You can set up a matching contribution to match your employee contribution. So you're getting double the contribution, and you also taking a deduction on your corporate tax return. I mean, that's just a win-win situation. And same thing with a 401k. If you want to set up a 401k account through your corporation, you can contribute to your 401k as an athlete and have a matching contribution as the employer, and have that deductible on your tax return. Man, you're saving a ton of money. I think the 2017 maximum contribution, I think it's 18,000 maybe, or maybe that was 2016. The contribution max changes all the time.
It's 53.
No, for the 401k.
Oh, 401k, yeah, 18.
Yeah, I think it's 18. But like SEP, the max is like, yeah, like she said, it's like $53,000. You know, so if you're making significant money, set up a corporation, then set up your retirement investment through the corporation and take the deduction for the contributions. That's a no-brainer. That's a no-brainer.
Yeah, the other thing I would say about the retirement idea is, like, yes, it saves you money on taxes, but as professional athletes, we don't have anything set up for when we turn 65, or if you want to retire at 55, or whenever that is. And so there is, you know, not traditional like you get at your work. Here's your retirement package that you can pay into, or whatever. Like that's why the SEP IRA comes into play, or a traditional IRA or a Roth IRA, is we need to start planning for age 65 and beyond. And we need to start doing that now. The more you put in now, the better off you'll be down the road. That's when you're starting to create a plan for yourself, so that, you know, you might have really good income coming in, and you finish your sport, and you got to start from the baseline where, you know, let's say you've been a six-figure earner this whole career, and you haven't really had opportunity to get any work experience. You start at $30,000 a year, and you've got to kind of figure it out. You're like, oh man, I'm not making as much money, but you stacked a good bit away. And you also want to be, of course, saving money for, you know, life after sports, so that you do have some wiggle room to figure out what you want to do next. So it's SEP and all these different kinds of retirement accounts are important, not just for tax deferral, but also so that you can actually have a plan for the future, because you don't want to be 65, have $0 in the bank, and have to work until you're 100, or, you know, forever, basically.
Yeah. How does paying a coach work out on your taxes? Fees you pay to your coach or your agent, they're 100% deductible on your tax return. You on the Schedule C, you can list that under contractor work, or legal and professional fees, or a separate line item as coaching. I usually list it as a separate line item under other expenses as coaching agent fees, and it's 100% deduction to you. Is a Credit Karma software?
$99 them, right?
Oh, right. Oh, yeah. I was going to talk about that. I actually took that slide out of my presentation, but this is an important filing requirement. If you pay a coach or an agent, an unincorporated person like a contractor, $600 or more in a given year, at the end of that year, you're required to file a 1099 or issue them a 1099 miscellaneous form, just like you get a 1099 miscellaneous form. You're required to issue that to your coach and file one with the IRS. That's a filing requirement. And like I was saying, today is the deadline to do that. If you missed that this year, I wouldn't worry too much about it. But for 2017, you want to definitely be on the filing requirement for that. Is the Credit Karma software that came out this year any good? You know what? I was actually going to test that over the weekend. I didn't get around to it. I ended up using something else. But I want to check that out for myself anyway. Just to, if a client has like a basic return, just one W-2, they can use something like that, Credit Karma or TurboTax. That's only if you have a basic return. But I'm not sure. I haven't used it yet. I haven't checked it out yet. So even if you're not incorporated, we can deduct any contributions to an IRA account as a sole proprietor. Right. So the SEP IRA is a self-employed a retirement account. Okay, self-employed pension dash individual retirement account. So yeah, but the contributions, it's not a dollar for dollar deduction on your contributions to the IRA account. Meaning, if you contribute $15,000 to your IRA, you don't get a $15,000 deduction. There's a calculation that goes into that, and there's also a calculation that goes to determine the maximum amount you can contribute, or the maximum amount, that you can contribute to the IRA account, and the maximum amount that you can deduct from the IRA account. So it really depends on what your net income is at the end of the year. That determines how much you're able to, your maximum contribution, and then how much of that is deductible on your tax return. But you can, to answer your question, you can make a contribution to a SEP IRA account even if you're not incorporated. Absolutely, you can.
And a traditional IRA as well.
And a traditional, thank you, yeah. Because you think about it, if you're a sole proprietor, you're a business. You're just an unincorporated business, but you're still privy to the same investment and retirement vehicles, or that corporations have. All right, a question about meals and entertainment. Yep.
Can you hear me?
I can hear you.
So how do we categorize things? Like, let's say we go out to the bar after a meet with our other runner friends. Mm-hmm. Is that entertainment? Can that be meals?
Yeah, well, meals and entertainment are treated alike as far as a 50% deduction. But you have to understand, meals and entertainment expenses are only deductible if you're away from home. So if I live in San Diego and I have a track meet in San Diego, I can't deduct meals and entertainment because I'm a local. If you're away from home, it's only deductible if you're away from home, if you're 50 miles or more from home.
Okay, and in that case, I would be doing the per diem, so that wouldn't really matter. But so
no, you wouldn't be. You couldn't do the per diem either because you're in your hometown. If you're local, if I live in San Diego and have a track meet in San Diego, I can't deduct travel or.
Right, but if I'm more than 50 miles away.
50 miles away, and you're going to be, you can deduct it, yeah.
Okay, and so what if if you are in your hometown where you train every day, and after practice you go out for brunch with your teammates, and you're discussing your training like you always do, and we play a big role in what we do for our next workout. Mm-hmm. Is that a business?
That's a business expense. If you're discussing business, if you're just hanging out, talking about girls and partying, then no. But if you're actually having a meeting, huh?
And if it's a mix, girls and partying, training?
Yeah, well, no. As long as you're talking about training and some sort of business. Like, I take clients out to dinner all the time, and we're talking about tax projections. Then we may just start talking about politics. But, and maybe at the end of the meal, I'll say, okay, so next year we're going to do this for your tax return. And then that legitimizes a deduction, But on your receipt, this is important, everyone. On your meals and entertainment receipts, make sure you write down the names of the parties you're entertaining or that's in your party, and just a general description of what that meeting was about, because it's just considered a business meeting that you're having away from your trading site.
And then, so can I follow up on that?
Yeah, sure.
So let's say, you know, you mentioned that sometimes our job is more than just making money on the track, but it's also, you know, endorsement deals and things like that. And it's speaking gigs and it's working at camps and things like that.
Absolutely.
So can things like haircuts, I mean, like cosmetic expenses, things to be presentable so you get more gigs, because it's, the job is part modeling, part things like that. Like,
if you're a model, yes, but if you're modeling for a campaign, then yes. If it's just to go speak at an engagement, then no, because you want to look presentable anyway. The IRS will frown upon that if you're just, you know. But if you're doing some sort of modeling ad and you need to, you know, get a manicure and, you know, makeup and go.
Or if you run for Nike and they occasionally have you do like a photo shoot or something like that.
Then in that case, then yeah, prepare for a photo shoot.
Okay.
Yeah. All right. I'm away from home training for a month in Flagstaff. Can I deduct the entire trip as an expense? Yep. If that's considered temporary, let's consider a temporary home. And if you're returning back to your main home, then that whole trip would be considered a business expense, a business trip. But then there's this is Mason. There is some literature on that on the IRS website, in the tax code about temporary homes, and that's resident. But for purpose of what you're just saying now, if you're just only be gone a month, then that's considered a business trip. But if you're gone for like 6 months or 9 months, then the IRS will consider that your main home. But I got to see what the criteria is, the length of stay for it to be considered anything other than a temporary home. But that's a really great question.
Yeah,
go ahead.
Go ahead. I was just gonna say right before the hour, and yeah, doesn't seem like any more. If you have more questions, go for. One thing I do want you to do before you drop off is add a topic that you're interested in, because, like I said, I plan on doing this once a month. Next month is social media branding, how to leverage it, your social media, how to potentially make money off of that, how you should be presenting yourself to if you want to have sponsors and things like that coming in. But please drop one topic that you're interested in before you jump off, and then you're welcome to stay on. And Tanisha, go ahead if you have more questions or whatever.
I'd like to just, if you guys have any questions beyond this webinar, you have my contact information, or Lauren, it's on the presentation slide, the very last slide. Feel free to email me, text me, or call me for any questions. But I would like to offer, for anyone who's attended this webinar, I'll help you with your tax return preparation for this year for free for attending this webinar. Just email me, Lauren, email me a list of participants who signed in for this tax seminar, and you guys give me a call or send me an email. Email works best for me, but just because I work full-time during the day doing financial reporting. But if you email me, I can email you right back more quickly than I can return your call right back, or if you text me. But get the names and contact information, and you guys just shoot me an email, and I'll tell you what to send me. I'll send you a tax organizer. You complete that and send over to me, and I'll be happy to prepare your tax return for this year. Okay?
So yeah, I just put my email address in the thing for anybody who didn't RSVP. Everybody who RSVP'd, I have your information. But if you didn't RSVP and you jumped on, you have my email address over there so that you can get on the list if you want the free tax return, or if you want the information that was sent out, that I'm going to send out. And so what we're going to send out is a checklist of just kind of like generally organizing your finance, a few of the questions that were asked tonight, just so you have that, and then also the PowerPoint presentation. So that'll be coming in an email to you with Tanisha's.
I'm sorry. Go ahead. I'm so sorry. I just got the
contact information. Okay. So be on the lookout for that.
Yeah. Okay. On the tax prep preparation, the free return, just make sure you email me. I know I think both of my email addresses, my personal and the business one. Just please send your information to the business email address so I can keep track of all you guys. The tmills at TanishaMillsCPA.com. Send that information to that email address.
Got it.
All right.
I got some notes here, so I'll get them.
Okay. Oh, we got a couple more minutes. And you guys, you know, you have my contact information. Even beyond this webinar, if you have any questions, we're here to help you. The main focus is to make sure you guys have the information available to you to plan and to stay organized. If you know, I help athletes and just general people, general clients with all sorts of tax problems. So if you have a tax problem, whether it's you need to file back taxes or you know, have a question about an audit or anything like that, feel free to reach out. We're here to help, and there's no tax problem that can't be solved in some sort of way. There's sorts of resources and resolutions we can come to get you guys squared away, because you don't want to have an IRS problem, okay? All right, when doing a 30-day training stint away from home in, say, Flagstaff, would I need a rent receipt from the landlord even if I'm paying rent under the table? Well, you're gonna need to, if you want to deduct their lodging, you're gonna need some sort of receipt. But you're gonna need a receipt, yeah, to substantiate that. But you don't, if you're trying to keep things on the table, well, you know what? Email me that question, and I'll give you the answer to that. Okay, because as a CPA, I can't ill advise you, but I can give you a workaround about that. Okay. But I don't want to say it verbally. Okay. All right, guys. Any other questions?
I don't see any topics going in that chat.
What do you guys want to, other topics? Topic interest, planning early for retirement. That's your area, Lauren. Also for Flagstaff, groceries deductible as part of the business trip. Yeah. That'd be like meals and entertainment, yeah. That would be deductible. 50% deductible.
But you got to eat everywhere you go, so.
Yeah, but if you're away on a training, that's like being away on a competition. What if you're doing a circuit in Europe for a month? You would be deducting your meals and expenses. That's the same thing. Can you post your business? Oh, yeah, sure. Business email. Here's my business email address. And here's my phone number, but it's also on the PowerPoint slide. That's my cell number.
Anybody else? Questions, comments, concerns?
Oh, you know what? On the tax return, donations to GoFundMe, PayPal. It depends on who is the recipient on the other end. If it's just an individual, then it won't be, because donations have to be, it has to be a legitimate charity, a bona fide charity recognized under the federal government. But if it's like, a GoFundMe for a friend's funeral or a relative's funeral, then no, that's not deductible. Okay. All right. Topic, agents, who to get, if any, how to get a contract, side endorsement, entry to meets. Oh, right on, Lauren. That's a good one.
I'm on that one already, too. Whoop, whoop.
All right.
Anybody else?
So Lauren will give me that list of all the participants, and you guys. Okay, so the tax return prep, it is free. I will do that for you for free, but to actually file it, to generate a return, I'll just charge $20 because that's the charge I get for generating a new return in the software. So it would just be $20, but everything else would be covered by me, okay? All good? All right. $20. Oh my gosh, that's hilarious.
That is going elsewhere, huh?
All right, all good.
All right. Well, thank you,
This has been great, guys.
I hope you guys are on next month.
Mm-hmm.
And you'll be getting an email tomorrow. Like I said, make
great
sure
question,
you
guys.
didn't RSVP originally, so I have your email too.
Dave, I'll get back to you on the per diem code.
I see Jeremy.
You have that in your arsenal, and someone was asking me about. Yeah, I think that was it, huh? The per diem rate code. Yeah. If Dave, you have any other questions about the audit, just reach out to me. Okay.
Yeah, Sharon, Jasmine, I don't think I have you guys' email address. Kelsey, did I email? Everybody who didn't email me. Okay, I'm just going to leave it up to you guys to email. Now we're lingering. All right, everybody. Good night.
Okay. Good night, guys. Thanks. All right.
Tanisha, hang on for a second.
Sure.
Pause.